Welcome back to Candlestick Signals for today's market, August 19th, 2025. Brace yourselves for a roller coaster ride as we dive into the candlestick signals that are shaping today's trading landscape. From bearish kickers to death crosses, we're about to unpack the technical indicators that have traders on the edge of their seats. So buckle up and get ready for a deep dive into the market's most telling patterns. The U.S. equity markets presented a mixed performance today, with the S&P 500 closing at 6,403.46, marking a slight decline of 0.71%. Meanwhile, the VIX volatility index spiked 5.27% to 15.78, signaling increased investor caution. As we navigate through the tail end of earnings season, the numbers continue to impress. A whopping 92% of S&P 500 companies have reported, with 82% beating analyst estimates and an average upside earnings surprise of 8.4%. Growth has been widespread, with 10 out of 11 sectors showing year-over-year improvement. The technology and communications sectors have been standout performers, boasting earnings growth exceeding 20%, although the energy sector has lagged behind. This week, all eyes are on the retail sector, as heavyweights like Home Depot, Lowe's, Target, and Walmart prepare to release their earnings. These reports will provide crucial insights into consumer sentiment and discretionary spending patterns. In the broader economic landscape, rising bond yields, with the 10-year U.S. Treasury hitting 4.33%, and ongoing global geopolitical events are exerting their influence on currency and commodity markets. It's worth noting that small and mid-cap stocks outperformed their large-cap counterparts today, while U.S. equity indices continue to hover near all-time highs, buoyed by strong earnings momentum and anticipated rate cuts. Now, let's delve into the candlestick structures that dominated today's trading session. One of the most prominent signals observed was the bearish kicker. This two-candle formation indicates a dramatic negative shift in investor sentiment, often serving as a harbinger of trend reversals. Its appearance today suggests a potential move away from risk assets and warns that the previously bullish environment may be losing steam. Another significant pattern we encountered was the Bearish Marubozu. Characterized by long, filled red candles with little to no wicks, this formation signals decisive selling pressure. We observe these candles particularly in selected industry giants, suggesting a continuation of downward momentum in these stocks. Death cross formations also made their presence felt, especially in the energy sector. This technical pattern, where a short-term moving average crosses below a long-term average, amplifies bearish outlooks and often confirms momentum derived from bearish candlestick signals in large-cap equities. From a technical interpretation standpoint, these patterns paint a cautious picture. The bearish kicker signals potential trend reversals, warning traders to be wary of a shift in market dynamics. Bearish Marubozu candles, particularly when found at sector highs or following a death cross event, it reinforces ongoing negative sentiment. It's crucial to note that when these candlestick reversals coincide with key earnings, misses, or guidance downgrades, their credibility is further enhanced, suggesting that traders are acting on both technical and fundamental catalysts. Let's zoom in on some sector and stock highlights. In the energy sector, Shineri Energy stood out with both a death cross and bearish Marubozu on its 15-minute chart. Underscoring the sector's weakness, the stock saw a decline of 3.2% by mid-afternoon, contributing to the sector's overall market cap decrease of $12 billion. The technology sector presented a mixed bag. Large-cap semiconductors like Intel showed significant price volatility, driven by news-related gaps. Strong bullish or bearish candles were common as investors digested policy headlines and major corporate investment announcements. Despite this volatility, the sector managed to eke out a gain of 0.5%, translating to a market capitalization increase of $15 billion. In the consumer discretionary space, all eyes are on upcoming earnings from retail giants. Stocks like Home Depot and Walmart are displaying engulfing and doji structures, signaling heightened indecision and the potential for high momentum moves post-earnings announcements. The sector saw a modest gain of 0.3%, adding $8 billion to its market cap. Market sentiment has grown increasingly cautious, evidenced by the surge in volatility and moderate pullbacks in major indices. While earnings momentum remains robust, the clear emergence of reversal signals such as the Bearish Kicker and Marubozu suggest profit-taking at highs and the need for heightened vigilance. Most technical analysts interpret today's candlestick formations as early warning signs rather than full-fledged trend reversals. However, they hint at increasing downside risk if macroeconomic uncertainties persist. Breaking down the major candlestick formations by industry capitalization, we see distinct patterns emerging. In large caps, Bearish Kicker and Marubozu dominated moves in highly traded megacaps, especially in the technology and energy sectors. These signals often appear at trend exhaustion points and can precede corrections. Mid-caps saw frequent engulfing patterns and doji formations, mirroring investor uncertainty. Small caps were characterized by spinning tops and hammer candles, reflecting choppy indecisive trading as these stocks react sharply to broader macro changes. To summarize the sector-specific candlestick formations and their technical outlooks, the technology sector displayed bearish kicker and engulfing patterns, suggesting a mild pullback and raising caution flags. Representative stocks like Intel, INTC, and NVIDIA exemplified these trends. In the energy sector, Marubozu and death cross formations reinforced a bearish outlook and downtrend. With Shinnery Energy serving as a prime example, the consumer discretionary sector showed doji and engulfing patterns, indicating volatility as the market awaits earnings reports from key players like Home Depot and Walmart. Financials exhibited kicker and engulfing patterns, suggesting profit-taking at highs, particularly evident in major banks. Lastly, the communication services sector displayed engulfing and spinning top patterns. With strong earnings driving the trend, Meta Platforms Meta stood out as a representative stock in this sector. As we conclude our analysis for August 19, 2025, it's clear that today's session has provided strong technical warning signs amid a fundamentally sound but nervous market. The spread of reversal candlestick signals, especially the bearish kicker, Marubozu, and confirmation of momentum technical patterns warrants a defensive posture. Sector rotation is evident, and traders should closely monitor both price signals and upcoming fundamental catalysts for confirmation of a more durable trend shift. The appearance of these bearish patterns, particularly in large-cap stocks, suggests that we may be approaching a point of trend exhaustion. This could potentially lead to a correction in the near term. However, it's important to note that these are early warning signs rather than definitive indicators of a market reversal. As we move forward, combining candlestick analysis with sector and industry themes, as well as macro headlines, will be crucial for navigating the remainder of the earnings season and key economic policy meetings this week. Traders and investors should remain vigilant, keeping a close eye on how these technical signals evolve and interact with upcoming fundamental data. Remember, in the world of technical analysis, context is key. While today's candlestick formations paint a cautious picture, they should be considered alongside other technical indicators, fundamental analysis, and broader market trends. As always, prudent risk management and a well-diversified portfolio remain essential strategies in navigating these complex market conditions. Stay tuned for our next market update, where we'll continue to unravel the intricate tapestry of market signals and trends. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.